Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Friday, October 17th, and you are tuned into the Friday Chart Fix. Thank you very much for joining us. So today we're going to look at the percentage of stocks above the 200-day EMA for the major indexes and the sectors, and we're going to rank performance and show you some of the biggest changes over the last 3 months. Then we'll look at the finance SPDR. It has broken down, and it is the second biggest sector in the S&P 500. Even so, technology is still the biggest sector, and XLK is still in a clear uptrend as it rides that upper Bollinger Band. And then we'll look at the Mag7 ETF because it is setting up with an oversold condition within a leading uptrend. Let's hit the charts. So I created a chart list with the percentage of stocks above the 200-day EMA for the major index ETFs and the sectors. And you can see this chart list here. And I'm viewing this chart list in summary view. And I'm also got the time frame here set at 3 months. You can see on the upper left. And then I did some column selections to take out the columns I didn't want and show the columns I want. And so basically you can see we have the symbol, we have the name, this is the last value, this is the change over the last 3 months, and this red bar denotes the magnitude of the change. And for example, you can see for the NASDAQ 100% above 200-day EMA, it's currently at 53%, which means 47% of stocks in the NASDAQ 100 are below their 200-day EMAs or in long-term downtrends. And so that basically says within the NASDAQ 100, things are split. Now we know that QQQ and the NASDAQ 100, they're driven by large caps basically. So the big boys, Microsoft, Alphabet, Meta, Amazon, Apple, Nvidia, Netflix, they are driving the NASDAQ 100. So breadth is not as important if you're trading the Qs, so to speak. But you can see if you're trading stocks within the NASDAQ 100, it's a split within the index, and that makes it a bit difficult to pick winners because half are in downtrends and half are in uptrends. Now, I'm also interested to see what are the biggest changes that we've seen. And you can see that the change over the last 3 months within the NASDAQ 100 is minus 17. So this indicator was at 70% 3 months ago, and it's now at 53%. If we just rank these indicators, you can see small caps are the weakest. The S&P Small Cap 600, only 45% of stocks are above their 200-day EMAs, which means 55% are below. The majority are below. So that just tells you, forget about small caps. They're not worth the trouble. If we look at the sectors, a couple of things stand out here. First, you look at the finance sector. 48% of stocks are above their 200-day EMAs. That means 52% are below, pretty much split. But look at the change. Over the last 3 months, that indicator fell 25.61. So it was around 74%, and it fell below 50% over the last 3 months. So finance is taking a hit, especially within, and we'll look at the XLF chart coming up. Also, basic materials took a big hit. This one fell around 30 points from, say, around 65 to 35. So materials are to be avoided. Now, if I look at some of the big changes, look at healthcare. It's got one of the biggest changes over the last 3 months, up 12.32. And so it moved from basically the 40 area to around 52. So it is showing strength over the last 3 months. And that's one of my more preferred sectors right now. We pointed out the double bottom breakout 2 weeks ago, showed some leading healthcare stocks a week ago. So I still like this sector. And then as far as the strongest sector of all, it's utilities, 100%. Basically all stocks in XLU are above their 200-day EMAs. Now, the second strongest sector within the universe here, the S&P 500 sectors, is still technology. 66% of technology stocks above their 200-day EMA. So that's still a sector we want to be looking into for individual stock setups. So here is XLF, and there is another reason to avoid XLF. If you're looking for individual ETFs or stocks, you want to first look at two things. First is the long-term trend up, and second are they showing relative strength. And if you don't say yes to both of those, then you just move on and look for a stock or ETF that shows a long-term uptrend and relative strength. Now, yeah, I know there are some bottom picking opportunities out there, but for the most part, sticking with long-term uptrends and relative strength is a solid strategy. So if we look at this chart here for XLF, you look at the price relative here. This is the XLF RSP ratio, and it rises when XLF outperforms, as it did in the latter part of 2024 and into the first quarter of 2025. Then it had relatively flat performance, and then you can see over the last 4 weeks, it has underperformed. That price relative broke below its 200-day and hit its lowest level since March. So XLF is underperforming, so that means move on, forget about it, ignore this sector as far as looking for setups. Now, if we look at the price chart here, we can see these lows here in September and early October, and we broke that support level. That's like the first shoe dropping. If you go back to February, you had a shoe dropping there, a bounce, and then the second shoe dropped in early April. So if we look back to current price action, that's a negative. We did get a bounce, but then we got clobbered on Thursday. So we do have a support zone around 51, 51 and a half. And if we break 51, then the long-term uptrend has reversed for XLF. But as I said, it already shows relative weakness. You look at the percentage of stocks above the 200-day EMA, it took a big hit. Less than 50% are above the 200-day EMA. So this sector is out. So note that finance is the second biggest sector in the S&P 500. It weighs in at around 13% of that key benchmark. But the XLK, the technology sector, is still the biggest sector. It accounts for around 34% of the S&P 500. So this is the one we need to be watching for real clues on what could happen to the S&P 500. Now, right now, XLK is holding up. It's still in a long-term uptrend. You can see it moving higher. It hit a new high here in October. It got clobbered on Friday and then formed 4 inside days. If you look down here, there's a 200-day, so we're well above the rising 200-day. Could we correct here? Certainly. But are we in a long-term uptrend? Yes. Are we in a leading uptrend? Yes, because we hit a new 52-week high here in October. So we have a leading uptrend. Now, I've got Bollinger Bands here. That is the pink shading there. And you can see here that we moved above the upper Bollinger Band in May, and then again in June, and then again in June, and then again in late July, and here in September. Didn't quite do it in October, but this is just basically riding the upper Bollinger Band. And you might say, well, that's overbought. Well, you expect things to become overbought in strong uptrends. You don't expect them to become oversold, but when they do become oversold, that is an opportunity, because oversold within an uptrend means you've had a pullback and there might be a trading opportunity on the chart. Now, we don't have that now, but if we close below, say, 275 and broke the lower Bollinger Band, I would suggest that that's going to be more of an opportunity than a threat. So in the indicator window, I've got %B, and this basically quantifies the Bollinger Bands, the level of the close relative to the upper and lower Bollinger Band. So when you're above 1, you're getting above the upper Bollinger Band. That's the closing price. And you can see several readings above 1 during this strong uptrend. And then when you go below 0, that means you close below the lower Bollinger Band. And we haven't been below 0 since April. And we got down to the 0 to 0.25 area in August, but didn't get oversold. So I'm still of the opinion that if we do get below 0, that's going to say, hey, we've got an oversold condition. We need to put it on our watch list for a potential setup. And when you put it on your watch list, that's when you analyze the price action and look for a potential upside catalyst or a tradable pattern. And we've got one of those next. So here is the Mag7 ETF, MAGS, and it is in a leading uptrend here. It didn't hit a new 52-week high here in October, but it's very close to that high still, and it did hit a 52-week high there in September. And so we're still in a long-term uptrend here. There's the rising 200-day SMA. And if you look at the Bollinger Bands, you can see you pretty much rode above the upper Bollinger Band with a number of closes above that band to signal that you're in a strong uptrend because you continue to get above that upper Bollinger Band. And if we look down at percent B, we can see the oversold readings, actually one. We did not become oversold in June, July, August, or September, but with the decline last Friday, we got below zero. So that's an oversold condition within a long-term uptrend. And you can see here that I drew some lines here, and I think we have a bull flag working. So we went down really sharply on Friday, a week ago, and then 4 inside days here. So the first thing would be if you get a pop above these highs here, above 65, that would be positive. And if you break above the high here from last week, that's going to trigger a flag breakout. And what is a flag? Well, a flag is a bullish continuation pattern. Actually, it's a continuation pattern that takes its bias from the direction of the previous move. So the previous move was up here in September to new highs. And so this is a correction after that advance. And if you break out, that signals a continuation higher. And these are the setups that I specialize on at TrendInvestorPro.com. We're looking for tradable pullbacks within long-term uptrends. We're also identifying the leaders and doing some serious chart analysis as well. So here is the TrendInvestorPro.com website. We're on the home page here, and you can see a description of our premium services. We do have 2 offerings within our premium services. You get both of them if you're a premium subscriber. We do chart analysis with videos on Tuesday, Wednesday, and Thursday. As I said, we're looking for pullbacks within uptrends. We're also looking for broad market signals. We got the Zweig breadth thrust there in April, and we got a trend signal in mid-May, and then we got the breadth models turning bullish later on. And then I show you how to look for oversold setups within long-term uptrends, which we just covered. And then we have a quantitative side where we do systematic trading strategies. And this is the NASDAQ 100 rotation strategy. And you can see that it has performed very well from 2005 to 2024. And we also have ranking tables, ranking stocks in the NASDAQ 100, and a quantified market timing model, the broad breadth model that basically tells you whether you're in a bull or a bear market. So I recommend you check out Trend Investor Pro. You get some free bonus reports if you do take a trial subscription, $9 trial subscription, get you access to everything at TrendInvestorPro.com. Hope to see you there. All right, so that is a wrap for the Friday chart fix. In a nutshell, there are some pockets of weakness within the stock market, no doubt about it. Regional banks, finance, industrials to some degree, housing, retail had a big hit. Those parts are weak, but still the technology sector and QQQ are still holding up, and that is enough to hold up the S&P 500 or keep it afloat, if you will. And I'm watching that bullish setup, the oversold condition setup in MAGS, and I'll be following up on that at Trend Investor Pro. So thanks a lot for tuning in, and have a great weekend.